Well, this month's been a lot of action, a lot of activity, and also a little bit of settling, which is good. The Reserve Bank met this week and they didn't make any changes to rates, which is highly likely to be the case for several months. The commentary and forecasting seems to be they don't want to drop from the current cash rate of 0.25 to go to 0 or lower. So the current home loan rate variable, a bit under 3%. If you're fixing, lower again, and investment slightly higher for P&I investment over 3%, 3.5%, 3.3%, 3.1%, very much bank by bank. Other things this month, the ACCC came out and said they are cranky at lenders for letting go old customers. Report that I will have in this month's written update. If you have a home loan 4 years old, it's likely to be statistically 0.4% higher than the same product issued to a client right now. So that's pretty crazy. It's also been the basis of the campaign, Shane, that we've run this month we've been calling through repricing, contacting banks on behalf of clients, and we've got well through our client list. If you want to personally contact us before we get to your file, that'd be awesome. But we've currently had 31 rate reductions we've negotiated with the banks for an average of $181 per customer, which we're super proud of, and it's been a big job. Julie's been fantastic. Julie's been the queen of chasing banks, getting in the back door of talking to lenders, pricing calculators. So crack a job to her and big thank you. She doesn't get as much yip-yar as she might sometimes.
Yeah, for some reason the lenders make it a little difficult to reduce your rate.
Yeah, it's hard to find out what the rate is at other banks. It's hard to find best deal. It's hard to find what your rate is on your statements even. It's a bit of a process to do that, and we're really proud of fighting through that. Average of $181 interest per month per customer we've done. Super stoked with that. What else this month, Shane? We've had a little bit of changing in lender policies. Do you want to comment a little on that?
Yeah, so lenders a little bit more reluctant to use things like overtime and bonus income, which you can understand in the current situation. One thing I'll comment on that is they have said that the things they're changing, so around overtime, bonuses, commissions, all temporary. They've all sort of come out and said, these are our changes for the next little while. These are, however, temporary. So, hopefully those sort of changes don't stick around too long. A little bit of changes to cash out too. They don't sort of want people taking out large sums of money, a little bit of restrictions around that. So they're the main sort of things. And casual, a bit around casual, and also self-employed clients just looking for a little bit more updated, whether it be BAS or business banking statements. So they might have done their 2019 financials, and banks in the past have sort of rested on those for quite a long period of time. Now they're more asking for, well, we want to see just something updated in the last little while to make sure you haven't been affected.
BAS. Yeah. And the other one that we've noticed is some segmentation of some industries banks not keen to lend in. So it's a little bit, very lender by lender and a little bit choppy, but broadly, people with stability, with comfort, with roles that they feel they have stability, with deposit, the normal lending rules still apply. So there's been a growing confidence that we've seen in the last particularly week or two, where we've started to see a fair amount of inquiry. First home buyers are always the engine room, especially in our area of confidence. It's a pretty known market and pretty stable market. You buy bricks and mortar, you buy a home. If it goes up a bit, goes down a bit long term, that's probably a more confident segment. The other segment we've seen a fair bit of is upsizers. So we've seen 2, 3, 4 people who are working with agents to sell their home, looking to buy up. Again, if there was a bit of a price drop, that's hopefully going to get a great opportunity. On the property side, the agents are telling us, and the data I'm seeing is that the prices still seem pretty solid, and there's still some good sales and good number of sales, and agents are finding it harder to get stock rather than harder to sell houses. There certainly seems to be, there is a reduction in the number of sales, but there's also a reduction in the number of buyers, and there's also initiatives to stabilise the market, like the JobKeeper, like the home loan pause capacity, like the rental capacity, the what's it called, the freeze on kicking out tenants, basically. So yeah, interesting to see where this will go, like with high unemployment or beyond the 6 months of the government support, et cetera, et cetera. But right now, we're seeing a good bit more confidence in our office this last week. Anything else in this month that you think's big to update people on, Shane?
No, I think that's good.
That's good.
Yep.
I think that's been a cracker monthly update, if I do say so myself. All right, thanks, guys. Have a great month.